Son, did you opt into your company's 401k yet? You know you get 2% match contributions, and by the time you're 65, you'll have $250,000 in your savings. Bearing, you might even outpace the rate of inflation just barely. No, Dad, I'm dollar cost averaging my way into Bitcoin and I'm almost done. Once I'm done with that, then I'll opt into my 401k contributions. Son, Bitcoin is used by terrorists on the dark web, and it's made by a guy who hasn't even revealed his identity. Are you sure you'd rather trust that rather over than a bank or a government or institutions who can save and hold your money? Why aren't you trusting those guys over there? But Dad, this is my own money. This is cool. I get to store my own money in my own wallet, and I don't have to rely on the bank to touch it. So I can just pay for things whenever I want, and I don't have to worry about transaction fees. It's the win-win for everyone, Dad. Why can't you see that? Ha ha ha. Silly millennials. Let's get you down and talk to a financial advisor. I heard he only takes 5% commissions off your actual investment. Take it from me, son. Over 30 years, I've grown my portfolio about 25%. So I know what I'm talking about. I've grown my portfolio 50% in the last 3 months. Josh, We Talk Crypto here. Hope you've enjoyed my horrible acting skills. Millennials, right? Why are we so interested in this asset class? Like, what is the big deal about it? And this isn't going to be a video just talking to you about all the merits of cryptocurrency. It's just going to be more as a perspective from a general millennial like myself. And, you know, why I personally done it, but why I think other people in my same demographic do these types of things. Because this is such a weird asset class and it's so volatile that it doesn't really make sense for people to be investing in it when it shoots up so high and then drops about 60% of its value in a matter of less than 2 weeks. So no one knows why we're all into this craze. But I can tell you one thing. Our generation doesn't really trust institutions to manage our wealth. It used to be back in the day when inflation was a lot lower that you could go get a job, you could go to college, you would have little student debt, you come out, get that job, and that job would support you for the rest of your life. You would invest in a pension, 401k. By the time you're 65, you're running down the hills into the sunset. It's a happy ending, right? That can't happen anymore because a lot has changed. Had economic crises, got into a lot of student loan debt. It's harder to get a job. The job market has become more specialized. You have to learn more specialized skills. Then there's always the threat of automation coming and infringing upon people's ability to get jobs. There's a lot of arguments on that, but I won't go into that detail. A lot of factors have been thrown in there that makes millennials trust the institutions that were supposedly there to provide financial well-being, and that has all been distorted and kind of thrown out the window. So it has left us with very few options to maintain and acquire wealth. Back in the day, you could, an asset class you could invest in, you could invest in stocks, you could buy and held them for years. Real estate, easier to finance a house, possibly, although interest rates are pretty low right now. You could start a business with a lot less bootstrapping and coming up with money. And nowadays, it's hard to do all those things. The student loan bubble is increasing. We just got out of the real estate bubble a decade ago. People were scared that could come back pretty soon because interest rates have been so low again. So you have that factoring into play. And on top of that, the rates for your jobs are paying a lot less for more amount of time that they expect from you. Less vacation time, slashing on benefits, and healthcare has become completely more complex. So again, what are millennials to do? This is the economic crisis that we were left in. We have to come up with other ways to increase financial freedom and attain that more easily. Real estate seems like a pretty good investment class. It has not as much risk as other investments, and you have a more hands-on control of your own investment. But try leveraging a $150,000, $200,000 house with a 10% down payment when you already have $30,000, $40,000 in student debt, or if you're one of the large cases, you might have over $100,000 in student debt. Try doing that with the credit history you have, working 2 jobs, and trying to maintain something like that, or whatever your situation is. Try doing any of that. try investing in stocks, going through a broker. None of that sounds really appealing, does it? You can't just work one job anymore unless it's a good paying job. You have to work enough to not only support yourself, but to also pay extra bills and allow you to live the life you want to live on a very budgeted basis, of course. So when we see an asset class like cryptocurrency, I don't have to pay a broker to go through to get my investment. I just buy from Coinbase. Yeah, the fees are pretty high. And then I have crypto right in my wallet. I control it. And I'm not getting charged any maintenance fees by the bank to control my investment. It's an asset that moves up and down rather than staying stagnant with maybe 1% interest, while banks get to borrow the money that I put in and charge ridiculous fees, which I'm pretty sure it doesn't even matter if they need to maintain my account. I'm pretty sure it's costless and feeless to maintain a checking or savings account. And I'm not sure why they do that, but they got to make money somehow, right? Those are the institutions out there. And of course, these are the first ones that you see denying the potential of Bitcoin and cryptocurrencies in general. Of course, Jamie Dimon came on it, and he's flip-flopping every other week. I love Bitcoin. I hate Bitcoin. Bitcoin's going to do awesome things. Bitcoin's going to fail. Bitcoin's a scam. Bitcoin is the real deal. Every other week. Make up your mind. A lot of people have arguments for being synonymous with money laundering and stuff, but then you could do that with the assets we have in this economy, like fiat and gold and other resources. So a lot of these arguments aren't really convincing us millennials to stop investing in cryptocurrencies. I mean, where else can you see this amount of growth by just buying Litecoin a couple of months ago and then having it increase about 4x its value? Where else can you see that? You can't really see that anywhere else in any other asset class. And if you do it in any other asset class, it's going to take a lot more research, time, and legwork to do. And that's fair. You should be researching whatever you're investing. You should be knowing your investment like the back of your hand, getting into detail about it, and doing what you need to make the most educated decision on what's going to happen in the future with it. And if it's a hands-on investment you control like real estate, you should be doing whatever you can to make sure you build the right network relationships, get the right tenants, get the right people to finance the house, get the right people to construct and repurpose and reshape the house. All of that's in your control. With cryptocurrencies, not a lot is in your control unless maybe you work directly for a platform or you're an influencer and you can get a lot of people to buy coins from the platform. Or if you're like myself, a programmer, although I haven't built any ICOs or projects myself. Unless you're a programmer, maybe you're trying to make this technology more available by building more open source tools or improving on it. Various ways you can help improve the program. So you see a lot of these millennials hopping on this bandwagon because it's so easy to buy. Of course, we like technology, so we do whatever we can. We go on Coinbase, make our password, two-factor authentication, we buy from Coinbase, and then we download these software products called digital wallets where we store our cryptocurrencies and own the keys to them. Some of us get hardware wallets where the keys don't even touch the computer and it's basically stored in a cold storage vault that is about the size of my palm, maybe even smaller, to store our cryptocurrencies. So you add up all these factors and the economic condition that we're in today, and millennials just want a fast store, a value that they can invest in, because one thing's for sure, this market could be a bubble. We don't know if it's going to be here from 5 to 10 years or now. But like at every bubble that there was, people still made huge gains and got out at the right time. They were rewarded. The market always works that way. Dutch tulip bubble, British South Sea Company bubble, the train stocks in Britain. People were buying these things before they blew up and they got out at the right time. Millennials, I guess, are trying to do the same thing. Some of us actually believe in the technology and its potential to be there even after a bubble if there's really good companies, products being made. Others want to get in and get out at the right time, take your profits and losses, leave, come back in. And that's fine. But you shouldn't shill a millennial just for trying to get into an asset class like this. If you ask a millennial to take seriously the asset classes that are out there today, there would be a lot of throwback on trusting the institutions that allow these asset classes to exist, and therefore it's tough to do. I'm not going to argue about the merits of a 401k or a Roth IRA because I personally believe in diversification, and I don't believe holding all of my assets in cryptocurrency. I'd rather someday move into real estate or move into starting and running a business or whatever it has to be. But it can't be denied overall that crypto asset class isn't an asset class that should be owned. In fact, I think it's the perfect part of diversifying your overall portfolio, because now you have a high risk, high reward asset. Where else are you ever going to get that? I mean, there's a lot of other risky things you can invest in, but not with the returns and not with the technology and the platform behind this, because this actually has utility and value. And people want to argue on the merits that if it does or doesn't, and they use Bitcoin as the prime example. But I always say look to the altcoins that have perfected products and are growing their network effects and scaling and gaining some of that market share of Bitcoin. Because Bitcoin dominance used to be around 70-60%, and now it's down to 34% as more people invest in altcoins. A lot of that is speculation, but other part of it is products that actually are being used and have utility. And we've seen with the last market crash that a lot of the new investors who were there for the speculation got in and got out as soon as it crashed, and the real investors holding the price and the support stayed because they believed in the actual projects that were going to happen. Next time you see a millennial with a Bitcoin sticker or Ethereum coffee mug, don't judge them, because there are a lot of factors that were different from the times. Older people may have grown up, or younger people below them will grow up. And if you're a millennial and you also think it's going to bubble, that's fine. You may be wanting to invest in other things, safer assets, lower risk, maybe lower reward, or you may just not want to be investing at all and you want to be earning your income through purely working or whatever measure you are of working. But that's how I see what millennials are doing, and that's why they're doing the things they do. And I would like to hear what you think. Why maybe millennials may be investing in crypto? Do you think it's wise for them to do? Do you think they should be focusing on other asset classes? Or what is your general experience? What do you generally see them doing? So if you found this valuable or helpful or insightful, any of the three, please leave a like and subscribe. Thanks again. Appreciate you watching. Josh, We Talk Crypto, and I'm out.